The
Yes, sir.
basic subject here is the financial discipline under RERA. Now, if you go back in the history of this law, which came in existence on 1st May 2017, pan India, and in Maharashtra from 1st July 2017, the issue of RERA basically is to regulate the real estate industry. So, the purpose of this whole act is to regulate and accordingly develop. So, first is regulate and develop. The regulation per se is basically the financial discipline and the operational discipline. Now, this industry has the curse of being the most financially indisciplined industry because the builders had no control from any authority about the fund utilization. They had all the discretion to use the money what they received the way they liked, which meant that the builder could do anything with the money without differentiating whether it is the debt that he has taken or the booking that he has taken or the other any other means he has raised the money. Now I'll just give you a case of financial diversion and then a case of financial misutilization. Now in the case of diversion, if you see what happens is that the builder who has taken money for project A without taking the consent of the project A allottees or the lenders, he can easily transfer the money to project B in the pre-RERA stage. In pre-RERA stage, he could do the money transfer without taking permission from anybody. Now that has been stopped. Now the RERA has made it obligatory on the part of the developer to utilize the money in a given fashion. Second case I can give you is about misutilization. For example, in my own experience, I had a builder client on the day of opening of the project. When I went for the Bhumi Pujan, I saw a brand new Mercedes standing there. And when I talked to that person, भैया तू कैसा लेके आया? He was very clear. They said कि दो इन्वेस्टर का पैसा मिला कल, तो I bought a Mercedes. I said this Mercedes cannot come from this money because the money is not yours still. You have not done the project. So he coolly told me that, sir, this money is for the project and nobody else can stop me from using the money. I am a builder doing a project of 200 crores. So I should be seen visible going in a Mercedes car. So that is required for my status elevation. So this is the way that the money was utilized by the builders. And now when the trouble came, the diversion and misutilization have created havoc in the real estate industry. So to prevent this from happening, the RERA has introduced financial discipline through the 70-30 formula and made it mandatory to utilize the money in a regulated manner and also to disclose the utilization of funds to the monitoring authority. So now there is a discipline being put on the developer and also there is a discipline being put by the authority that they are watching the developer. Next slide, please. Yeah. So what happens is now the RERA provision. It says that for financial discipline, the whatever collection that the builder makes, out of that 70% should be and must be transferred to a RERA account. So there is now a RERA designated account wherein the money has to be transferred. It is obligatory on the part of the developer to transfer that money. He has to give an undertaking at the time of registration that yes, he will be following this procedure and make sure that 70% of the collection goes for the purpose of construction only. The purpose has been defined very clearly that it should be only to cover the cost of construction and the land cost, and no other purpose is permitted. So now what happens is that every collection 70% should and must go to the construction activity and not for anything else. Plus the discipline is being brought in by involving three more professionals. a chartered accountant, engineer, and architect. So, for utilization of the money, the first stage is to transfer the money to a separate account. The second stage is to get the money, the information certified by three professionals. So now the discipline is proposed to be executed by virtue of four people coming together: the developer as the beneficiary, the engineer, the architect, and the chartered accountant. And the issue is of issuing certificates, not of issuing reports. A certificate, as we all understand, is certifying facts. It is supposed to give true and correct picture, not true and fair picture. It is not a report that the CA is supposed to comment on that. He is supposed to extract information from the accounts maintained by the developer and make sure that all the data is presented properly and correctly. He cannot take any chances while certifying information. While reporting, he can put clauses of qualification. Here, the issue is of certification. So, it is mandatory on the part of the chartered accountant to make sure that whatever data he is presenting is in line with the facts and nothing else but the facts. The certificate issued by the CA is to be verified by another colleague of his, wherein he is going to comment on that. Now, the submission by the CA fraternity is in two stages. First is the certificate in form number 3 to be issued by the chartered accountant other than the auditor. The certificate is to be issued at two stages, or rather, first stage is the registration documents, and second, at each update. For each withdrawal from the bank account, the developer is required to get the form number 3 from the chartered accountant, giving him his entitlement to withdraw. Unless this entitlement to withdraw, the developer is not allowed under the RERA provisions to touch the money. So, Form 3 becomes very important. Unless that Form 3 is issued, the developer is not permitted. So, all the operations of the developer can come to a grinding halt. So, the information has to be prepared online in time, and the CA should make sure that he should give the certificate in time. So, the onus is on the developer as well as the chartered accountant to make sure that the facts are presented properly. The financial discipline of maintaining the accounts, presenting the accounts is on the developer. The onus of properly certifying the data after due verification stands on the part of the chartered accountant. Then, after the accounting year is over, there is one more obligation cast by RERA. It says that an audit will be conducted by the statutory auditor, and in that report which has to be given, rather certificate which has to be given by the statutory auditor, he is supposed to comment on the Form 3 which is issued by his professional brother, and in the report, if you have seen it very carefully, he is supposed to observe about the correctness of the information given in Form 3 by his fellow chartered accountant. And the provision which is explaining this arrangement is very, very important for all CAs to understand. So the provision says that in case of any adverse remark by the auditor on the certificate issued by the chartered accountant, the said matter shall be referred. The word is shall, not may. The matter shall be referred to the Institute of Chartered Accountants of India, and proper disciplinary action may be taken. That the word is may be taken by the institute, and such action may involve even removal from membership. So, a chartered accountant issuing one certificate also gets this liability of getting this adverse action on him in case he falsifies the data or makes some mistake, genuine or intentional, in certifying the information. So, the financial discipline So under RERA is not only for the developer, but it is even for the chartered accountant also, while issuing form number 3 and issuing form number 5. Both the cases, the chartered accountant has to be extremely careful so that no liability is cast upon him for the financial indiscipline or financial mismanagement or financial improper way of handling things by the developer. So my first request and submission to my fraternity is that please make sure that whatever you are certifying is correct. You maintain proper notes of all the information, all the data presented to you, and take the management representation letter also, give wherein their assumptions made while giving the information to you. Please make sure that you do not go overboard to benefit your client, because that will be suicidal on their part in time to come, because the authority also is looking into this form 3 as well as form 5. The authority is all the time watching you and making sure that you give the right information. A certificate once issued remains on record permanently. So you don't have any option of changing that certificate subsequently. So make sure that you take all the good care while issuing the certificate and certify only the correct information. Now, here we have to understand the discipline of the developer in the context of all the submission that is making, because the developer is liable to make submissions under various laws. It is not only RERA, but along with that, the company law, the income tax law, the GST law, all these laws also come into play. The RERA information which is submitted by the chartered accountant and the developer is available to other authorities also. There have been instances of the income tax department asking for this information from the developer during the course of scrutiny, which happens and wherein the data has to be matched. We have been seeing this, that the GST returns are required to be matched with the income tax return, and it is obligatory on the part of the chartered accountant and the client to do this for the department. Same way, Form 3 of RERA and Form 5 of RERA will also have to be matched with the accounts of the company, the GST return, the TDS return. So make sure that your client has the financial discipline to keep things in proper shape and give the correct information under all the laws. He should not mismatch things or manage things or alter things to match the account of other laws. Just giving an example, the client wants to claim more expenditure under RERA. So he has booked the bill of some labor contractor under RERA, but he has not accounted for that bill in the books of accounts for the purpose of audit. This is suicidal because he doesn't want to pay GST to the contractor today. Now he has done a mischief by showing one record to the CA who is issuing form number 3 and given some different information while filing GST returns. This can be suicidal for the developer as well as for the chartered accountant. So it is our earnest duty as a chartered accountant to make sure that the client has the proper financial discipline. He doesn't tamper with the data, doesn't give different data for different compliances. So our financial discipline for us is to educate the client and make him aware that this nonsense will not be permitted under the law. Either you will get in trouble under RERA or under GST or under income tax. So don't finger with that data. Yeah. So I'll here just give an example of the work completed to make you understand about this concept. See, in the form number 3, which this year certifies, we are required to compute the percentage of work completed depending on the basis of the expenditure incurred. So in form number 3, for this data, the developer wants maximum completion because he wants to claim maximum amount of money for withdrawal from the project. So here the intention of the developer is show more completion, more percentage of completion, so that his entitlement to get money is increased. In form number one, if you see of the architect, he is supposed to certify the physical percentage on the basis of work on site. So he is going to certify the work completed on site on the basis of physical verification. He cannot say a lie because it is the physical form which is seeing, feeling, and certifying. Next is the percentage completion for the purpose of revenue recognition. Here there is a catch. While finalizing the accounts of any entity by the developer has to look into multiple things. He wants to satisfy his banker, who is the lender. He wants to satisfy his shareholders who are having a stake in the project. He wants to make sure that his certificate shows lesser amount of completion so that he doesn't pay more taxes. Now, here the intention of the developer may be to manage the account in such a fashion that he may be liable to pay less income tax. And to not to pay income tax or to pay less income tax is a very practical thing that every builder or developer wants to do. In that situation, now that percentage completion has to be looked into very, very carefully by the auditor so that that percentage and the percentage given in form 3 do not go haywire. In that case, the developer will come into trouble. Then there is a completion certificate from architect for raising demand on allottees. Here, the developer wants maximum percentage of completion so that he can demand more money from the allottees. Now, the issue here is, and I'd like to invite the attention of this August gathering to the fact that the financial and accounting discipline must be maintained while disclosing the percentage of work completed in each of the above mentioned compliance. Now, these four percentages which are worked out by four people may not be matching each other, in which case each one of them will have to be very, very careful about this mismatch, because this mismatch is going to create trouble for everybody in time to come. So, my request to all my fellow members is, first and foremost, read the RERA law very carefully before issuing a certificate. Read the explanations and the circulars which have been given under the law. Once you are done with that, then start the working on the certificates. Make sure that all the clients that you have are made aware of the financial discipline expected from them. Make them aware that the whatever nonsense was being practiced in the past cannot be practiced now. You cannot take chances or tamper with the law. You cannot take chances with RERA. RERA is an authority which is very, very immediately responsive to any of the issues raised by the allottees. So do not take chances with RERA. Maintain financial discipline. Maintain your accounts properly. First and foremost job of all of us will be to educate the client and make him aware of this. In case you are successful in doing this, then you are successful in getting all the data matched under all the laws. If you do not do this, then you are bound to give a leeway to the developer to play mischief with the data and play mischief with the department. Please make sure that you don't do that. Now, as regard the financial discipline part of 70-30, 70% to be utilized for what purpose is defined under RERA. The certificate in form number 3 is very clear. It gives the heads how it has to be shown, how it has to be disclosed. So make sure that the accounting records are maintained in such a fashion that the record as expected by you for certification is available and it is not tampered with. Every time you issue a certificate, make it a point to get the financial data copied and kept with you. Keep the notes ready with you in case of any eventuality of any action or any problem from the institute side, from the RERA side. Make sure that you don't end on the wrong side of the law. As regard the developer is concerned, my only request to all the developers is have better interaction with your chartered accountant. He is your mentor for guiding you for the financial discipline. The discipline is to be practiced by each and every developer. The 70-30 criteria cannot be tampered with. He has to make sure that he cannot siphon off money from the project or divert the money from the project. He has to make sure that the project is completed in the true spirit. He has to adhere to the date he has promised, and for that purpose, the discipline of finances is very, very important. As I told you, buying a Mercedes car or the first booking is absolutely not permitted, not expected. So, my request is that financial discipline under RERA has to be practiced by everybody, the developer and the CA fraternity. Thank you for listening to me patiently.